messed up the sound. Wait, we're gonna do this again. 1 second. Give me a break. Okay, 3, 2, 1.
Welcome YouTube. Welcome to my bullish and bearish Elliott wave scenarios on Bitcoin. Woo-woo! Bye.
Okay, there we go. I forgot to put the sound on, man. No. Oh. Nice. That's the, there's a first time for everything, including Ashley doing the Oracle doing the introduction of the live stream. Yo, what's up, everyone? I messed up the first time. So usually when I open the live stream, right, there's a few things I have to do. First is open the microphone in OBS, Streamlabs OBS, and then 2, switch the scene and put the music softer. And I basically only switched the scene, and then she said the introduction and left, but you guys didn't hear it, so she came back. What's up, guys? Good to have you here. And yeah, for the ones that do not know that person, that is my wife, Ashley. She's in real estate. She sometimes watches the live streams as well. And literally a few minutes before the live stream, she's like, yo, what do you always say in your videos again? And she was thinking, because she hears it every day, of course, pretty much. And she was thinking, and she was like, welcome, Elliott. And then eventually she figured it out, like, welcome to my bullish and bearish Elliott wave scenarios on Bitcoin. And then I was like, do you want to do the intro today? And she was like, shall I do it? Is that okay for your professional? I'm like, yeah, sure, just do it, man. So there you go. Everyone that just comes in missed the most special introduction of a Kunst Trading live stream so far. No. You guys missed my wife opening opening the stream. Welcome, everyone. Yo, Jazz, thanks for becoming a member, man. Welcome. I already gave you the role in Discord. Likely Jeroen is the one gonna send you an email. Make sure to check out the FAQ channel first, so that you know what's going on there. And do not forget that as a Diamond member, you also have access to gold and silver. So in gold, there's a lot of additional info, Elliott Wave related. And then, of course, you have Diamond. Where in Diamond, I recommend to first watch the content about creating your plan. Then go to the files and the downloads, like first teaching content, then create your plan channel, and then my plans. But welcome, man. Thanks for joining right at the beginning, actually before the live stream. Welcome, Jazz back. Beerbit, how you doing, man? Tawan got contabilidade. Jeez, I'll just call you Conta. Welcome. AH44, Jeroen, Roman, TP. What's up, guys? Bina, John, hit the like button. Thanks, John, Rodney, Matthias, always popping in from Argentina. Good morning, man. Serga Rayat. Incredible Jackman. Mohib, Sibel, what's up? Yeah, you're muted. I know. We did it again, though. We did it again. Bring her back. Yeah. My wife now, so she has French lessons at 3 p.m. in 19 minutes now. So she's going to prepare for that. But hey, at least we tried. We tried, right? Welcome, Sibel, Odin. What's up? Thanks for being here. Mool, Adam. What's up, Adam? Mario. Karen K, what's up? Clinton, Sam, Ashley the Oracle, a great cheerleader. She is. Yeah, it was the Oracle. But nowadays, if I ask her like up or down, bullish or bearish, all right, for the fun and giggles, then she says, you got to stick to your plan. She watched too many of my live streams now. Like she knows what's up. So, but it's good. It's good that she does that. No? What's up, WXYXZ? I hope you adopt the bullish scenario since we are in the end of a negative time phase of gun. Interesting. So I'm a little bit familiar with gun, but there's so much depth to the gun method, especially in the Gold Elliott Waves channel. Samith and Ike talk a lot about gun, and Rosie has now started to check in on gun as well. Wow, man, there's a lot of knowledge, like a lot out there about gun. It's so deep. She should open every time. Yeah, no one wants me anymore. You look, if I had the beauty of Ash, but the knowledge of Kun, wouldn't that be the perfect scenario for an Elliott Wave channel? Unfortunately, I don't have the beauty of Ashley. She can get the brains of Kun though, in a way that she can study Elliott Waves and then take over. Yeah, that was my wife. She's from South Africa. Yeah, from Cape Town. Yes, we're together now for 6 years, 5 months, and 7 days. Sederot, welcome. Do you look at alt in depth on Discord, or is it really Bitcoin focused? Do you look at alt? Oh, I look in every channel, and whenever I get tags, I tend to look there as well. So I reply to the tags whenever I can. Of course, there's a lot happening on the background, just outside of making content. There's a lot of things running. But I keep an eye on most of what's happening in Discord. Yeah. Sidiams, what's up? Eugenio, Parames, Dan, welcome, guy. Opening in French next. Bonjour tout le monde. On va parler and then something dans le bullish and bearish Elliott Wave scenarios à Bitcoin. I don't know. Partly correct, I hope. Hope she pops in the chat. I don't know, she does have a lesson soon, but maybe. Bogdan Random, what's up? Wave 5 high time frame target, 81k to 129k. You are beautiful too. Thank you, Sidiums, man. Thank you. Altcoins. Yeah. Yesterday we did a whole altcoin stream. So let's start. In today's live stream, by the way, it's going to be a lot of chatting and Q&A. This is the Linktree, by the way. You can find it in the description. It has everything you need to know about the Kunz Trading channel. And please, if you do try to find me on other platforms, just make use of this. Don't look for Kunz Trading, because there's many scam channels, as any content creator unfortunately has. But if we go to the... Wait, we forgot to put the altcoin channel in here. Jeroen. Oops. So, okay, that's something we got to improve. This one is the Linktree is brand new. It was... let me just do this. We made the Linktree at the end of last week. But if you go here and down here, so here you go. Yesterday we did Doge, Sol, ETH, Crow, Kaspa, TRB, STRK, Core, Rose, AXS, and few more. But we do look at alts. Maybe today we have some time. Let's focus on Bitcoin. So in today's live stream there will be a lot of chatting and Q&A because not much has changed since the last time, which was this morning. Of course, the probabilities of this morning played out. Price taking out the high after an 886 touch. That was the 15-minute probabilities. And other than that, we covered the weekly, daily probabilities in the previous video. So I will shortly summarize this. And then we already go into chatting and Q&A, and then we can see where chatting will bring us. I'll be online for another 1 hour, 15 minutes, so we have more than enough time to answer questions, hang out, look at the chart and whatnot. As a complete Elliott wave beginner, to start with, that would be gold. Now, usually what I recommend for your own sake would be to start with, if you click on the link tree below in the description, go to Elliott Wave website, right? And study this. Then go to the Elliott Wave Full Guide public playlist, which is on my YouTube channel, and then jump into the gold membership. It's not that like of course you can just immediately go into gold. That's no problem. Like you will learn everything about Elliott waves there as well. And gold is mainly about shortening the learning curve. So you can of course use gold with these two combined. But generally, I at least recommend to have a look at these public free sources and then jump into gold to shorten your learning curve. Ask questions, try counts, look at how others are counting in the group as well. Ask for feedback. And then your learning curve will significantly improve instead of you studying by yourself. Yaga, that was the oracle indeed. Where can I find the link tree? It's in the description. If you open the description, it will say there's a link there called LINKTREE. Okay, let's start. Welcome, everyone. We're going to shortly cover what's going on, a summary of the morning update, and then it's going to be chatting Q&A and answer questions, education, all of that stuff. So we are 18 minutes in. Cool. Weekly time frame scenario. The first two scenarios here are the two higher probability scenarios. And then there's a couple of alternatives. I'll shortly explain why they are alternatives and how probabilities would change in favor of these scenarios. So first of all, your bullish scenario, weekly bullish scenario. This is the primary. And here we have a target area of 81 to 129K, which was a question in the chat earlier. Now, of course, a wave 5 has to be a 5-wave structure, right? 1, 2, 3, 4, and eventually a wave 5. At the moment, we are moving up on an increased amount of volume in the last closed candle here. So inside this wave 5, you would still look for 1, 2, 3, a 4, and a 5, right? You're looking for a sideways retracement and then eventually another move in a 5 minimum, right? So that is something we look out for. So at the moment, you would still be looking for higher on a weekly time frame, even though we have hit the minimum target for a wave 5 at least, right? What we also like to see is that price makes a higher high on a lower amount of volume compared to the peak volume in your wave 3. You want to compare the volume in a wave 3 to a wave 5, and you do like to see wave 5 having a lower amount of volume compared to your wave 3, which at the moment is the case. Now, the moment price moves up, however, and volume increases and takes out the peak volume of your 3, that is the moment where we're either going to be looking for an extended 5, meaning 5 is long. So you have 1, 2, 3, 4, and an extended 5. But that is actually very uncommon. And that would therefore increase the probabilities for the alternative scenario that I have here, right? So if we get an increased amount of volume compared to 3, the alternative might become the primary. Talk about that soon. On the daily time frame, we are keeping a close eye on the multi 1-2 here. Very simplistic, of course, what we have here on the chart, 1-2-1-2, and volume increasing, preferably an increased amount of volume is part of your wave 3, as in an impulsive structure, 1, 2, 3, 4, 5. Most commonly, your wave 3 is the one with the highest amount of volume. Therefore, we want to label this move to the upside 3, and eventually we are still looking for a 4, a 5, a 4, a 5 minimum, because we have 2 1-2s, we also need 2 4-5s. Now there is the potential of having another finished 1-2 here on the lower time frame, and then another 1-2, right? Now invalidation is changing market structure, so that's quite simple. But even if you would take out market structure, you are still looking for continuation another 1, 2 in this scenario. Either directly move to the upside with very shallow retracements, which is normal in a bull market, right? Or have a bit of a washout and then eventually you continue. Invalidation nonetheless is 66.7. So in other words, you look for price to continue to the upside anyway. And then finally here, the alternative scenarios. Weekly time frame alternative is a more bullish scenario where you look for much higher prices. And in this scenario, you do want price to take out the peak volume of your latest move to the upside. If we do, the probabilities increase for this scenario and go down for the other weekly scenario. Here, we then look for a big wave 3, preferably has the highest amount of volume, and then 2 big ranges. These ranges in a wave 4 will easily, very likely, based on the ranges we have here, take multiple months. Then the alternative daily scenario is that the impulse that we had on the chart about like, I think a week, maybe a bit more, a bit over a week ago. And that was only the wide count, 1, 2, 3, 4, 5. Remember this one, right? Now has a higher degree blue count on top of it. So last week we spoke about what I drew here on the chart, right? The 1, 2, 3, 4, 5. And I said, well, the probabilities aren't too great for that scenario because now your peak volume is in a wave 5 and that's less common compared to a wave 3. And if we add a layer on top, which is the blue count, then you get a 1, 2, 1, 2, 3, 4, 5, 4, 5. Of course, your wave 5 in white of the bigger 3 would have the highest amount of volume, which is still something that's not common, right? But at least it's in a blue wave 3. So we can use that as a not like an excuse, but it's still in a bigger 3, right? The top volume, the highest peak volume is still in the blue 3. It's just in the white 5, which is less common, and it's all probability. So it affects the probabilities, right? There's a few other things that do lower probabilities as well. This wave 4 is shorter in time than your wave 2, which is less common, right? Your wave 3 is bigger on a linear scale compared to your wave 1. This wave 3 is shorter than your 5 on a linear scale, but wave 3 is not allowed to be the shortest wave, which it isn't, right? Because it's longer than your wave 1. Look here, see the wick above this 1-to-1 trend-based fib extension taken from the low to the high of wide 1 to the low of wide 2. However, the reason that it does affect some of the probabilities is because on a log scale, your wave 3 is shorter than your wave 1. Now that is not very common, first of all. Second, if price moves up to 83.5k, on a log scale, this being an impulse would be invalidated. So you would need to retrace for a blue 4 before touching 83.5k on log. So you can see there is a difference here, right? Quite an important one between log scale and linear scale. Linear scale, it's fine. Even though 3 is shorter than 5, which is less common because 5 being the longest wave is quite simply not as common as 3 being extended. Extended 3 is the most common, and then you have your 5 and your 1, right? So it impacts probabilities. And on a log scale, your 5 needs to be shorter than 3. So it cannot hit 83.5k. So yeah, nice one, right? That's one to keep in mind. Now in this scenario, you would still look for a blue 4 and another move up in 5. So in the end, you're still looking for price to move up, even if you get a retracement, no problem. The targets will move to the upside as Bitcoin moves to the upside, right? Until you eventually start a bigger range, right? And then finally, the most bearish scenario is a flat 3 wave A, 3 wave B, 5 wave C. Target area for B is where we are now, most commonly, between the 1.236 and the 1.38 Fibonacci. And after B, you're looking for an impulse down in C. Now, in this case, your B is then a double zigzag. So you have an A, B, C, and W, zigzag in X, and another A, B, C up in a wave Y. However, this scenario only becomes more of a serious consideration if price can take out 66, because that is also, of course, your, not that one, it is your invalidation of a multi 1-2, right? And even in the alternative scenario, going below 66.7 means going below the 0.5 target for a wave 4, right? And the 618 is the real invalidation, but it wouldn't really be good to see. So it only really becomes a serious consideration in a bull market on a weekly time frame to look for a flat like this. Of course, also here, highest amount of volume as price moves up, right? So impulsive till proven otherwise. Now we do have news not today, but this week, Wednesday, Thursday, and Friday. Make sure you trade safe, especially on Wednesday and Thursday. Usually I don't really expect too much of this stuff, but maybe times are different. I don't know a lot about news anyway, but I do know that the core inflation stuff and PPI stuff tend to have more of an effect. Correct me if I'm wrong, but that's generally what I experience on the chart. I don't know the ins and outs of what it means compared to retail sales. So yeah. And that is basically it. Now, with regards to targets, or targets, I suppose more like resistance areas, then you can see we are now at a green box. Now, we struggled for a short period of time to get almost a week to get through the first box here. The second one wasn't that difficult. We did, of course, have quite a wick and closed the first candle testing this box in the box, but then moved above, perfect retest, like that's very nice. And then we move to the next one, and here you can see we are now at the box between 82 and 83.6. So let's see how price is reacting to the resistance here, right? So yeah, there you go. Yeah, and I do have some things to say still of what is to come. So 1 second here. Let me first write. So what's going to happen is that the quality of, first of all, the live stream and the videos will increase, and second, there will be a new style of video coming to the channel in starting November would be a nice goal, but otherwise December. First of all, I will buy a brand new webcam, a light as well, a new laptop and stuff, so it will improve of course, the webcam quality, but also streaming will be more smooth. I can probably go to 60 FPS as well, which might be more of a fluent experience for the ones that can watch at HD 60 FPS, with a probably bitrate of like 5K. And with regards to the newer videos, very soon I will announce an editor for the channel, Lachlan. He lives in Melbourne, Australia. Amazing guy. I will talk more about him later. Started his editing journey in February. Brand new to it, never did it before. Learned, and reached out to me. Very, very well done, because usually I ignore everything. But he was very personalized, and that triggered me. Got in touch, and I'm happy to say that I will then be his first client, his freelancer client. Great guy, and another young gun added to then the team, let's say, right? And one of the videos that we're going to implement is videos on Saturday. Those will be pre-recorded, and those will be more talking head videos. Now, what does that mean? That means, and that's also why a webcam is good, is that we have a script, right? We prepare this very well, so it takes time, especially from his side as well. We create a script, and then I look into the camera and I talk about whatever we want to say in that video. And then it's about different topics. It's not an update of the market. It's, for example, the first video that we wrote a script for now is about the 6 steps to create your personalized trading plan. But then in a bit more detail with an introduction, and then step 1, 2, 3, 4, 5, 6, and then a conclusion. And then Lachlan, he will then edit the video, right? Nicely, beautifully, all that sort of stuff. Of course, we moved to France, or I moved, and my wife, we moved to France. And we moved to a furnished apartment. So this is not, and we rent it because it's easiest, right? If you move countries, we didn't immediately want to buy because we don't know life in the south of France. We wanted to rent, and then it's easiest to have a furnished place because then you can chuck everything out that you owned, and then you just arrive here and ta-da, right? So it makes life easy. So I never really wanted to update my office and put a lot of like stuff behind me. But I'm thinking about it, and maybe play with lighting as well, maybe like red and blue strips or that sort of stuff. But I'm not a handyman, let's say. So I like to keep it simple. So maybe like a simple closet, like the squares, and then I can put some stuff in the closet, and then put some lights on the background, and maybe a plant or something, Christmas tree, and then that's that. So if you just jumped in, first of all, you missed my wife opening the live stream. So if you want to see her beautiful introduction and a little bit like my fuck up, then go to the beginning. The Elliott wave analysis started at minute 18. And now we're going to start with chatting and a Q&A. Now, let me see here what happened as I was analyzing. Don't you think if we go ahead with this speed and this rising price, we finish the cycle too early in time? Currently, March to October 2025 is my time horizon. But I don't really think you need to worry about finishing a cycle too early. Because mind you that if you are looking at a wave 5, right? So even if you're looking for a 5, you are still locally in a wave 3. You would still need wave 4s and wave 5s. Now we can at least count a double 1, 2 here. So you would at least look for a double 4, 5. Most commonly your wave 4s are longer than your wave 2s, which will easily be a couple of months of sideways ranging in your 4s without the impulses in a 5 as well. And we're already in November. So March is already getting quite close, right? And then of course you have October, and that's only in this scenario. Of course, if you go to the even more bullish scenario here, I mean, here you expect strong continuation and then 4, 5s at the latest stage, where these wave 4s are much bigger, right? In time. Those might also be like half a year, but then you're going to end very late, right? That's also why it's an alternative. So at the moment, time-wise, no problem so far. It's doing well. It's doing Bitcoin things. If you would go back in the past, you'll also see, of course, that after the halving and then eventually you take out all-time high, there tends to be a quick spurt, and then eventually you get back into the ranging structures, right? The wave 4s and the wave 5s. And that is where time is wasted. Those are the sideways structures, and they will take a lot of time. Miku, welcome. Thanks, by the way, Miku, for your email as well about new laptop stuff. Many opinions out there, makes life a bit tricky, but I have been doing good research as well. So I kind of made a decision in a way. I have like a list of stuff that I'm gonna buy, to like business equipment, and I'm now slowly filling the list with links and then the prices, and create a whole overview for myself. Lenny, maybe. That's correct, maybe. WXYXZ, in theory, I'm quite good with Elliott wave analysis. When it comes to implementation, I struggle greatly because I don't have a master such as you. I mean, implementation is the most difficult part, right? I mean, learning the theory, everyone can learn the theory by stompen, as we say in the Netherlands, just like repetition, writing it down, notebooks and all that stuff. It's the implementation that is tougher because the chart is not as perfect as the drawn examples generally in books or in educational material. And yeah, that is where indeed being here on the channel and attending live streams, right, where I can answer questions as well. But that like being in the gold section, those are things that can really help to reduce someone's learning curve because I can reply. Mark, by the way, Marky Mark and the Funky Dutch, this guy. Hey, what's up, Mark? What's up? What's happening? I'm in a short. Tell all the retailers to go long and build some liquidity for me. Ooh, good luck. Good luck. At least we are at one of my green boxes. So, JP, welcome. I expect some midweek reverse to flush out late longs. I mean, I wouldn't mind seeing a bit of a reversal, but I need a great sign of like weakness. And at the moment, locally, this range here is still very young on the lower time frame as well. There's no clear sign of weakness. There's not a lot of information here at the moment. This looks quite three-wave, you know. So unless this becomes a diagonal, it's bullish again, and you take out the high. So yeah, and every range we had so far here, right? We identified, first of all, patience, wait for a bit of a range to form, and there's been no weakness. Price just moves up. Now, of course, I won't mind a retracement at all. You know, stop some people out and liquidations, but we are, following the market, and if it gives us an opportunity, then I'll take it. But in such a market, I'm not short. I haven't shorted at all here. But it's also not my plan. If someone does have a plan, like scalping or another plan, then that's perfectly fine, of course. Is there a reason to fill the CME gap at 77K? I don't really use CME gaps myself. Gap filler. Nice one. So I don't really use CME gaps in my analysis. It's not part of the confluences. Is there a reason to fill it? I wouldn't know if there's ever a reason to fill a gap, if there's maybe a fundamental reason to it. I just know that gaps can, of course, provide support if price is above it. And if you close a candle in the middle of a gap, it increases probabilities to fill the gap. But it's not. Is there a reason? For me, there's no reason to move down to a CME gap. But what I think would be interesting is to collect data and statistics on CME gaps. So if you're, for example, on a daily time frame or a 1 hour, 4 hour, doesn't matter, but on this particular time frame, you check the CME gaps and you track data on how many percent of the CME, how many percent of the CME gaps get filled after 1 day, after 2 days, after 3 days, after 4 days. And that will give you quite a good idea of the probabilities of price moving to a CME gap. And your expectation as well. But you would need to track data. Yeah, same here. Koens is going fancy. Probably you won't notice too much. It's just a webcam improvement, but my webcam, like especially during the day, it's okay. But I'm gonna have this is of course just a laptop webcam, but I'm gonna have a separate one. What is it? Logitech Stream Cam or something it's called, I think. I always like Logitech. I also have a Logitech keyboard. I have a Logitech mouse. I'm familiar with the brand, so yeah, I've been looking into it. And I do know they have great webcams, especially back in the day when I was a professional gamer with all the other content creator friends. Many of them, or actually most of them, used Logitech. Just don't you? No, no. Do not worry, TP. And it's also not going to be videos where we talk about predictions. It's more educational videos. Yeah, more me in front of the webcam, and it's not an analysis. It doesn't include the chart. It's a lot more educational material. The new style of videos that is then coming up. So, yeah. Exactly, Mark. Could you please explain the weekly count for end? Why we're skipping the first 1, 2? Yes, so that's actually on the daily. So the reason I start my 1, 2 here is because in your wave 4, right, you can end your wave 4 here also with a triangle in a W, X, Y. And in that case, you would count 1, 2, 1, 2. Of course, alternatively, if you look at like A, B, C, then this has to be a 1, 2, 1, 2, 1, 2. That's a triple 1, 2, right? However, what I prefer to do, and this is, I guess, more personal style, right? I gotta say the triangle here, especially with a 3-way structure, doesn't look too bad, right? 3, 3, 3, and then this small little move, right? Now, it's all about being conservative. So if you have a double 1, 2, 1, 2, 1, 2, and you look for 3, you're going to look for 4, 5, 4, 5, right? 2 4 5s, because you have 2 1 2s. Now, after the last wave 5, which is your green 5, we will know, based on the retracement, if this is the end, and we have a bigger retracement, or if we get another 3-wave corrective mess here, and we continue. If you get this, I will just add another 1, 2 here. But at the moment, it doesn't matter. Probably for the upcoming weeks, it doesn't matter, right? But at the moment, you can finish your 4 here after a WXY triangle Y, or you can try to finish it here with then a wave 1 and this being a 2, which I gotta say is very ugly. Because of course your 2 is incredibly long. Counting this as a complete 1 is like a problem with your 2 and your 4. So at the moment I don't like counting this at all. Of course when it was printed we were counting it and it was enjoyful, or I enjoyed it because it's a puzzle and we did very well. But as price is now over here, you don't need this at all at the moment. It's a waste of chart space. So I just have a double 1, 2 here on the chart, and then I look, of course, for eventually 2 4 5s. And if you would print another 1, 2, then I'm going to look for 3 4 5 4 5 4 5. And if there's going to be another one 4 5, I'll just add a 1, 2 here. So that's the reason why it's simplicity. It's also being a bit more conservative, I suppose, instead of having that 1, 2 plus counting that structure from 49 to the upside as a wave 1 and then a wave 2. I know it's a very ugly structure. I don't like it. Aussie represent. Yeah, there's multiple. Sorry. Wave 5 targets are given by the wave 4 expansion. Yes, it's taking a Fibonacci from the start to the end of 4 and toggle on the 1.236 and the 1.618. Take the 1 to 1 from the start of 1, end of 1 to the end of 4, and take the 0.618 trend-based Fib extension from the start of 1, end of 3, end of 4. That will give you your target. Can you give the KRZ targets? Oh yeah, I mean, I can just show them. That's for sure. I didn't put any. Did I? Yeah, I do actually have higher ones. So first of all, current green box 82.1, 83.6. Then here we have 88.4, 89.2. Then there's a bit of a gap, right? So the red ones, I put them on my chart in 2021. So those are very, very old. But then here we have 116, 123, 127, 130. And then the last one I have on my chart is 140, 146. I didn't want to really... well, I have apparently still one here. I missed that one. Didn't make it green even. 219, 227. But I haven't really done too much here because, you know, we're at 81K. So let's first wait and see where price goes, and I can always add them later. But those are the targets for like the KRZ targets. Yeah. And how to add all targets for Fibonacci. Not too sure what you mean with the targets for Fibonacci, but so KRZ is something that I have personally back in the day found. And just to show the fib, let me show the fib first. So well, let me show the fib that's actually relevant in this case. So it looks very full. And actually in a bull market, you're going to do this. So this are your KRZ pockets. It's always the 2, 3, 6 and the 3, 8. Now, short little bit of storytelling. When price moved up here in July 2021, that is when I found this, because I had a couple of losses in a row, and every loss had like the same problem. So I was analyzing my loss, and that's how I found this. So I only use this really in price discovery, but you have the 0 line, the 1 line, and what you're looking for is, of course, you have price action, right? Price action, and price that needs to dip into this pocket and then move to the other side. When the pocket here, the 1.236 to the 1.38 is respected, you will see that it becomes very likely that these pockets are going to be respected as well. And you can see that on the chart, right? Because usually you already have information. So let me show, this is, what are we gonna, let me start on a weekly time frame. Now you can see I do a couple of pulls at the same time, and then I compare the different pulls. Lock skill is on. And now we are checking. So let me just show it one by one. So this one is taken on a weekly time frame, as you can see here, from the low at 6.5 to the high at 10.4. The weekly time frame candle closed perfectly inside the pocket. Let me actually toggle on the. Let me just do this. Poof. Yeah. So you can see nicely support in this pocket. We move up, we break above the 0, little bit of resistance at pocket 1, drop down, little bit of resistance at pocket 2, bit of ranging at pocket 3, and then here at around 3.38, yeah, we made that all-time high, came down to the 2, right? Moved back up to 3, middle, above 3, didn't really necessarily have something. But then we came below the 3, retested the yellow line, moved to the 2, up, below the 2, retest 2, down to 1, right? Below 1, not too much going on here. Back above 1, support, and you can just see it, right? Support on 1, move to 2, and then eventually now we're here. So you can also see the support here, right? Now, looks good. So of course, these are therefore interesting to keep an eye on. And we have the next one here, 84 to 90. But I use multiple pulls at the same time to find confluence. So this just shows you how it works, right? But then I have a couple of pulls. This one here. I have to zoom in, else I'm going to get text. There we go. This one, of course, taken from the current low. There we go. And also here, right? It's a different pool. So now I can compare the results of the one that I did before with this one. And if there's overlap between, let's say, the 338 here and the 3, like this pocket, the 3 pocket, if there's confluence between this 3 pocket and from the pool that I did here, there might be another pocket here. There's 2 KRZs in the same place, right? Which adds to the resistance, adds to the confluence. And that's where we are now. So here you can see support, right? Move up, ranging around the 0, move up to the 1, find support, move up to the 2, find support, move up to the 3. Right? And this is weekly time frame, but you can use this on any time frame really, if you wish to. Where did I pull this one from again? Oh yeah. That's from, this was, I think this might actually be a daily. Yeah, this is, I think, actually a daily one. It's in my weekly folder. But this one is pulled here. And then on the daily, we found support. Final example, and then you get the point. And then you extend it again, and then you look towards the upside, right? So, oops. So find support, we move beyond 1, 0, 1, 0, up, right? Not too much, especially we already tested this twice, so of course it fails. You can see we had multiple weekly candles ranging sideways at 2. We pass it, move to 3, resistance at 3. Pass it, resistance at 4. Move up. And then yeah, we were this one 5 didn't provide much resistance, but then you had 6, 5, 6, 5, 6, and then you move to 4, and yeah, you get the idea. So yeah, KRZ, and those are areas that I keep an eye on, and I have weekly, daily, and 4-hour KRZs on my chart, which are responsible for getting the targets. And the targets you see here, like for example, I have this is a weekly KRZ, so it's very big, but then inside I have this one, right? And this is a daily KRZ. A GP is for another day, but there's 2 different KRZs on the daily that have this area in them. So therefore I then put it on. So I always have at least 2 KRZs areas together as a confluence to create a green box. And yeah, so price moved, and that's only above all-time high. This white box is just a normal target box from the past, but you can see here we almost stayed a week below green, move up. 1 candle close in the box, right, with a bit of a wick, but then we moved above. Retest next. Now we're here. So yeah, hopefully it explains a little bit how it works. Any news events I gotta watch out for next this week? Yes. Better at trading ranges rather than the pumps. I guess, like for me that would be the same. I always enter in the ranges. I of course I make use of the pump, but my entries are generally in ranging structures. And it's also good to know your strength, right? What are you good at? You don't need to trade every part of the chart. You just need to trade your plan, no? Not yet, Florian, not yet. Welcome, by the way. I'll make sure to check it. What do you think about bigger B and now down C in the weekly? What do you think about a bigger B and now C? That's a flat. I explained the flat in the analysis. It's a scenario I have, but it's not the highest probability scenario. We would need to see significant weakness first, probably multiple days with price moving impulsively to the downside before it is considered. And the probabilities for this only really increase if you take out the 66, 67K low. Till that moment, it's not a high probability scenario. Have you decided Apple winner? I'm not sure if anyone is able to switch, it's you. But is there really a need to change to Apple? I wonder your decision. Is there a need? I guess if we talk about a need, then of course there's not necessarily a need to get another Windows or get an Apple laptop, right? I mean, there is a need, as in like the equipment I use now is perfectly fine, but I want backup stuff, because if my laptop, it's now already 5 or 6 years old, if it would go down, then I'm without I'm without another laptop. So I just want to have this as a backup and get a new one. Now, Apple or Windows, I mean, this is the one I have now is a gaming one, and I have compared the systems, the temperatures, the fans, the performance, and I am very interested in the newer MacBooks, the 16. So, I mean, yeah, why not? And I've never used an Apple laptop, but what I can do is build experience with the laptop while I still use the Windows system, and then eventually switch. So, yeah, and then I have one Windows and one Apple. And also, I always bring my laptop around, like very, very portable is important to me. The sound of the fans, temperature, portability, performance, and probably in both cases I won't really notice the performance as I look at high end anyway. So I won't max the performance of a gaming nor a MacBook Pro, but it's about it's the size, it's the portability, it's the temperature, it's the fan, like the silence. And of course, it's a new system, but I like learning new things. So I'm actually not. I'm quite interested in just learning it, and then I'll figure out if I actually like it more or not. And if I don't, then I can always go back to Windows. And of course, I still have this laptop, so I can always still use this. And then I can just plug in the webcam and everything to this laptop, or I just buy another one. And then the MacBook Pro, I don't know. I'll just use it for other work, not necessarily streaming or yeah. I'm about to KRZ stands for Koen's reversal zone. I know it's cheeky, but this is Koen 2021 coming up with a name, and I needed something. So because I found it and I was like, oh, this is interesting, let me give it a name. And I noticed that price loves to reverse in the 1.236 to the 1.38 pocket. Like you'll see, even in range, I also have a range version, which is this one here. It happens so often. And I was like, oh, I need a name. This is more like a trading template. But you pull it, 1.38 to the 1.236, and if price then can break out of the zero on the other side, keep an eye on all of these, depending on how far price goes. It's very useful. Oh, I don't know, maybe we can pull one here actually. Kind of. Bit of resistance. Flipping to support question. Next one would be 83. This is 1 hour. Generally use it a bit more on the higher time frames. It's not something I use in my, in my daily trading activity, let's say. Hit the zero, flip the zero, move straight through. Like this is like nothing happened here. Resistance at the 4, closing candles in the 3, move up to 4, resistance, up to 5, eventually touch 6, move down to 2. It's just on the thing is that on the lower time frames, it feels like there's so much happening. The gaps are relatively close, so I prefer the higher time frames. It gives me more peace of mind. Here we had the 8 at the moment. All right, so rejecting from the 8, currently testing 7, lose 7, potentially move to 6. And Ace, where's your stop loss? Because this is the gain, but what is going to be the loss? 23% gain with a 7x short. What's your stop loss? That's of course, you don't have to say it, but that's the way, it's the way of thinking, right? So if you're wrong, how much do you lose? That's more important than how much do you gain. Icons, where you see a stop for Bitcoin and alts realistically this bull run, and around what time? March to October, more accurate. I will be able to be more accurate as more information comes in early 2025. Top, at the moment it's quite a big area, you know. If I would go to my monthly time frame chart, it's 81k to 176k. On this chart, like just if you only use the weekly, not the monthly, only the weekly, then your target would be 81 to 130. But on the monthly, you have another 40k as a target. So there's a bit of a difference between the two. Yeah, that's at the moment. Based on new information, we can adapt. And that's also, of course, if price would move up on a weekly time frame and the volume is going to increase compared to the move from 40k to 65k or 60k, right? We can look for the potential of higher targets. 75% that the local top will be in this week. Not top 11. No. I mean, Gabriel, like I don't look. I don't know if this is more if you're trolling or if it's actually serious. But of course, basically since 49k, you have been bearish. I'm starting to be concerned here. You were always talking about downside. A top is in, and then price goes up and up and up, and a top is in, and I'm looking for 50% down tomorrow, and you know by next week we're going to be at 40k and ta ta ta. Like, what does it take to switch bullish and then just wait for the chart to give you a sign of weakness to look for price to move down? I mean, at the moment we just go up again, so we just took the high. So I don't know if it's seriously trolling now or if it's really like your style of trading, which would be very much against the trend. What did you wait? When did you exit your last long trade? Around the last cycle top in 2021. Now in 2021, I was learning and I was failing mostly. So yeah, I started my journey here. Wait, this is the weekly time frame. 1 second. This is this here. Right. That's when I got into the chart. And so therefore, this top here for me was completely clueless. I was I in a long, yeah, or spot long, yes. And then I wrote it all the way back down. And then back up again, and then my ass was stupid enough to then close it here. You know, it's experience, it's education. I forgive myself in my first year. But that was a spot one, by the way. I did have a futures. I had two futures ones. I had one when we broke out here and one that when we went up here. Those did pretty well. Not the biggest ones I've had, but you know, it's pretty decent. But I just wasn't as good as I am nowadays. I have a lot more experience. My psychology is a lot better controlled. I have a much clearer plan and what I look for. So I never sniped Like the futures long, that I, for example, after this retracement, right, confirming a three-wave structure down, price moves up, looking for price to take out the high. The thing is that once we moved up here, I was never confident of very bullish continuation because there was zero volume. So I didn't really trust it too much. And when price started ranging here, that's where I was like, yeah, I'm happy, I'm out. Because here price moved relatively quickly, so that's easy. Yeah, you just go with the trend. But then here, this is also where I had some doubt, and you know, I just wasn't too confident. And then, yeah, did I know that this was going to be a high and then we had a big move down? No, right? Absolutely not. Like, again, I was an amateur, right? So, yeah, closing in the range, especially with we had, of course, a very quick move down for the ones that remember. I don't know. I even don't know if that was news related, but price was ranging and we then moved up and then we got this crazy wick. Yeah, here, this one. You remember this one for the ones that were there? On the lower time frame, you'll see on a 1 hour, up, and then we are here, and then we are ranging, and then out of nowhere, it like, poop, swiped some of the lows on a lower time frame. I just wasn't, I don't know, I wasn't ready for these ranges. And also when price reversed this deep, my mental just, I wasn't good enough, right? 15% down. I couldn't cope very well with holding on to retracements above all-time high. I didn't really have, of course, I had some KRZ zones, but yeah, it's your first year, so it's difficult to say. But yeah, I definitely, from a futures trading perspective, I had some good ones. Spot trading, I was really bad, very, very bad. I think we got a package delivered. So yeah, 2021 was my first year. Many mistakes were made, but many lessons were learned. Camarilla indicator. Oh, it would be interesting to compare if we drop at 40k and then make another all-time high by next year. What will be the Elliott wave analysis? A flat, either wave Y as a flat in a bear market WXY, or you have a flat in a wave 4 to 40k and then move to all-time highs for your wave 5. Did you count the second top from 22 in November also as an overshooting B or an expanding flat? No. I prefer counting it to just as a 5, but it doesn't matter for the weekly time frame analysis, to be honest. So I don't really have a count there anymore. But back in the day, I preferred to look at it from an ABC 3-wave structure or an 5-wave structure. 1, 2 was around 40k, and then move up to 3, and then the range before the all-time high was your 4 there. Because we never had a range that size at around 65 to 69k, right? Before we made the second all-time high, 69. We never made a range that long when we moved up from 40k. So it made more sense to count 1, 2, 3, 4, 5, with 2 being the range that found support at like 38, like 40k range, and then the next one, wave 4, is then your 65k range. Settings for CVD. I'm using CVD in TradingView. I don't use CVD in TradingView, so unfortunately I'm not able to assist you. I use CVD in a platform called AGGR, which is a lot more accurate, and in my opinion, it's the only way to go. If there's ever going to be a TradingView indicator doing a CVD indicator on TradingView that is very accurate, I'll make sure to, of course, mention it. But so far, AGGR has a lot better CVDs compared to TradingView, and that's because of the calculation. It has to do with the candles. I don't know the ins and the outs. That's up to the dev. But I don't use CVD now. If you are on TradingView, at least, if you do want to get and it's absolutely free, so if you do want CVD or learn more about it, the website is here, right? charts.aggr.trade. It's a public website, right? I have no affiliation whatsoever. There's no paid environment. It's free. You can just do whatever you like. So that's the website. This is my template. It's the link in the first Discord logo sign in the description, which you probably see. Brings you to this message with the template here. So you can just download the template. And here is a one-pager that I made together with a video about CVD, which is on my channel. Yo, Moib, what's up, man? What's up? Welcome. You won't miss Solitaire. No, I don't play. I don't really play games anymore. And if I want to play games, I of course have the current laptop as well. But yeah, I barely play games. I need to be a bit quicker here. So we were here. Async Tradingview fib retracement. Just put, like, you can type. So just pull the fib. Right, and then you can just change the number. So you can open a check, remove the number 0.886, and there you go. Right. Count Doku. Hi, man. First of all, thanks for your guidance. It is a pleasure. Have a question. Keep in mind I'm an amateur. Switch to the 3-day chart, comparing price and CVD from today and mid-March. Is that a bearish divergence? Probably not, because CVD moves down. Also, you actually only want to use CVD. I'll go to the 1 day because I will know. CVD is best used on the lower time frames, not the high time frames. So of course, if we do zoom out, you could theoretically here see a very big, let me remove the lines for a second, because it can't be calculated anyway. I'm too high here, too zoomed out. But here you can see the CVD chart is basically just moving down and down and down, right? So arguably you can say, oh, we got a big bullish CVD. So side note, CVDs work different compared to RSI, MACD, that sort of stuff. So a CVD divergence, bullish CVD divergence, is a higher low on the price, but a lower low on the CVD. A bearish CVD divergence is a lower high on price, but a higher high on the CVD. Right? On the daily, if you zoom out, the issue is that CVD basically always goes down here. Right? It's not useful. I don't use. I never recommend using CVDs on such a high time frame, because it just constantly creates bullish CVDs on a daily at least. But if you go to the 15 or 30 minute, or maybe like a 1 hour or the 4 hour when price was moving up, that's doable, right? More local. 15 is my favorite. 3 minute is very good as well. Those are the good time frames. On the daily, it's just not as useful. So this would be a very big bullish CVD, not a bearish one. It's also not exhaustion, and So yeah, but then again, preferably you use it on a 15 minute time frame, or for the scalpers, 3-5 minute, 1 hour, 4 hour. 4 hour would be a bit more swing trading. I know, Mark. Mark, I'm actually not sure if you were, I think you were there already, but one time in Discord, we had a guy, I don't know, his name was something like Armageddon or something. And he also, in Discord, always had the incredibly bearish counts, but he was so convinced that he tried to convince the whole Discord group. Eventually, we had to kick him, Cheers, Christian. Futures were invented in the Netherlands, and they were contracts for tulips. Look at the Dutchies go. I'm proud to be Dutch. From mid of December will be only bullish. Okay, so 1 month. 1 month of bearishness. Look, I wouldn't mind like the question is, of course, if a retracement would be considered bearish, but if we have to go from 82 to 40, that would be a pretty nutty bearish candle, no? Having a retracement just to continue the bull market, of course, and stay above 67, that's perfectly fine. But would be a crazy candle if you want to go to 40. Something like a COVID crash. Yeah, never say never, of course. But then again, I would like the COVID crash. The thing with the COVID crash is, of course, that before the crash happened, we already had many weeks of sideways price action, and the probabilities, right, if you go to the lower time frames, were higher to see another drop. Did we know COVID was going to come? No. Did we know the candle was going to be that big? Also no. But the expectation was there from an Elliott wave point of view. Now, currently, we are just moving up. So we don't yet have like many weekly candles creating a range and many days creating a sideways range. If we do move down, like a COVID crash type of scenario, it has to be like a wave C, very likely, in the bigger flat. Which means that from the all-time high, we need a 5-wave impulsive structure down, which at the moment we haven't seen because every move down is currently it's all the time 3-wave corrective structures, every range. So what you want to see is a 5-wave, 1, 2, 3, 4, 5, retracement, short opportunity, right? If more weakness is shown preferably instead of just this, right? You want to have a clear 3-wave move up, increasing probabilities to take the low for not, and this can bullish wise become a zigzag, A, B, C, and you continue. Bearish, there is the potential for a bigger impulse, right? And then another retracement continuation. That's what you need to go down that far, which at the moment, of course, we with this hourly candle, we made a new all-time high again. So it will take a bit of time, I think. AGGR is the best. Yeah, I really love AGGR. Look, I would prefer having a very good CVD and Tradingview. Not gonna lie, because then I have everything in one platform instead of having a second tab open, right? So of course, from a analysis point of view, I would prefer having just like adding it to Tradingview would be great. But there's just no CVD indicator that I have tested and have seen that comes close to the performance of AGGR. The developer I talk with in the group, Mr. Friends, we are checking, like, can we potentially build a CVD indicator that is good enough compared to what we use on AGGR, but it's very, it's just chats. Building a strategy. This is, of course, good, yeah. Build a strategy. I don't think it's a good... I don't know exactly what you mean here, Lawrence Bayer, but building a strategy, right? And then, of course, one can hope for a Black Swan event, but building a strategy is indeed the way to go. Bearish divergence on the monthly. That would probably be like RSI, I guess. It doesn't work well, and it does work actually very nicely in a bear market, but lower time frame. So in the bear market, right? And you probably saw it as well in this range. Of course, this is a bull market, but just as an example, if you go to the 50-minute time frame and check the CVD and this move down, then every small bounce up here had bearish CVDs, right? Over here, every move up had bearish CVDs, and that is what you see, but then in large on or in a bear market. So you don't want to use CVD on the higher time frames, but on the lower time frames, right? Price moves down, consistent bearish CVDs as price is moving, right, to the downside. That's what you're going to be focused on. So it works, but it's lower time frame, right? You don't want to, on the daily, it's like, oh, it's always bullish. But on the lower time frame, that is where the strength is of CVD. It's not on the daily, it's on the lower time frames, which for a day trader, of course, is most useful as well. And I am a day trader, yeah. Over here, I haven't mentioned. I think you posted the question earlier in the live chat, but I haven't yet checked it. Would need to do that later. But cheers. Thanks for the question, though, Florian. I'll make sure to check it. Hi, Kun, Karen K. If we have a 3-wave down, then move up and hit the 618, I understand that it decreases the probability of an impulse and take out the high. Explain a little more. Let me see a little bit of space here. Just zoom in. Boop. If we have 3 waves down, and then move up and hit the 618, oh wait, I see where you're coming from. I think you mean from this high to the low. Okay, so there's a couple of things going on. You might want to review this bit because it might go a little quick. But okay, if we have a 3-wave structure to the downside, at this moment in time, we do not yet know if this is a 5, 3, 5, right? We don't yet know. Oh, my control, 1 second. I'm refreshing. My control Z, I don't know why that is with TradingView. Then out of nowhere, my control Z doesn't work. Okay, loading. There we go. Cool. Yeah, now it works again. So if we have a 3-wave structure to the downside and you pull the 618, right? Now at this moment in time, you're either looking for an ABC, which is bullish, or a wave 1, 2, 3, 4, 5, which of course is bearish. That would be an impulse to the downside. Now the moment you have your C and a little bit lower, and your 618 is touched, what you know now is that this 1, 2, 3, 4, 5 is not possible because your wave 4 hit the 618, which is like an invalidation for your wave 4, right? Lower time frame. So 3-wave structure, price hits the 618, wave 4 invalidated, which now means that probabilities slightly increase for this to be an ABC, and your only bullish scenario that is left would be a double 1-2, 1-2-1-2 continuation down. Your bullish scenario would be a zigzag down, correction, and either you continue up or maybe a double zigzag, for example. But the moment the 618 is touched, it invalidates an impulse. And if you invalidate an impulse and you think about probabilities of bullish bearish, of course, if one of the impulsive structures becomes invalidated, it will automatically increase probabilities for a corrective structure. Your only bearish scenario then is going to be a double 1-2, right? And in that case, if price would then touch, besides the 618, the 886 here, right? Probabilities for a double 1-2 are going to be extremely low. So it even more increases probabilities for an ABC and for price to take out that high later, right? Now then your other scenario would still be a diagonal ABC or a 1, 2, 3, 4, 5 correction continuation, but a diagonal is way too early to call after a 3-wave structure. So you're not yet thinking about diagonals here. You only think about diagonals later. So the probabilities for a diagonal only really go up after wave 4 and 5 are finished, right? So yeah, you have a 3-wave structure. If your C has, this is also interesting, if your C has the highest volume, so higher than your A or your 3, right? So this move down has higher volume than your first move down, and this move down is longer than this move. The moment you touch the 618, probabilities go down again for an impulse because wave 4 is invalidated, but also are lower for a double 1-2 because your second one is longer than your first one, which is less common, plus the second one has a lot more volume, which is a little less common unless you're in a very bullish market where we are now, right? So then it's fine, but can happen. So well, if we have a 3, then move up and hit the 618, decrease probabilities of an impulse and take out the high. So yeah, that's how probabilities and scenarios change, right? So you have, of course, initially you think, oh, bullish or bearish. When price is here, we don't know. This can be bullish, can be bearish if we do not follow the context of what happened before, right? If we don't know what happened before, it's completely blank. Then currently here, probabilities are 50-50, no? We don't know. We have A, B, C. Can also be 1, 2, 3, right? Especially if volume here is increasing. So yeah, we don't know. It's 50-50. At the moment you move up and touch the 618, so the moment you move up and touch the 618, especially if your second leg down here had a higher amount of volume compared to your first leg down, higher amount of volume, and is also longer, which is more common. Wave C tends to be longer than a wave A anyway. The moment you hit the 618, you have to take away one of the bullish impulsive structures, which automatically, of course, means if you think about probabilities, your 50-50 is now going to change. Because if this is your bullish and this, well, bull, and this is your bear, look at my beautiful writing, because you got a, like, impulse down doesn't work anymore automatically, and you have higher volume here, and the second leg is longer than the first, which is common in a C as well. Of course, your bear probabilities are going to be higher than your bull probabilities, which are going to reduce because your impulse is invalidated. Now, if price then also moves up and touches the 886, taken from the same high to the same low, then your double 1-2 is also very low probabilities, especially if you take this high, because it's the invalidation of a double 1-2. So then you again add probabilities to the bear, right? And only if price then creates a diagonal, which is then the 3 wave, and they have 1, 2, 3, 4, 5. Only when price makes after this low, so after this low, right? Another 2 lows with a 3 wave structure internally. That is when the probabilities are going to move back towards neutral, because now we have the potential for a diagonal, or it's a WXY XZ or WXY corrective structure. But now it very much depends on then the retracement. So if you have a diagonal, 1, 2, 3, 4, 5, you want a corrective retracement and a move down. But this move, right, you can also have a WXY XZ or W, and then inside X a flat, and then a Y, which can look like a diagonal. But then you have an impulse up. So this retracement will decide more of the probabilities that you attach to your structure. Hopefully you get it. So it's playing with the probabilities, right? So that is the impact of a 618. Now, mind you, the moment, of course, your 618 is touched, the most bearish scenario, a double 1-2, is your primary, in this case bearish, because we are looking for a move down. A double 1-2 is going to be your main bearish scenario. And your bullish scenario is this is an ABC and up. If price, right, moves down here, and you go down, it doesn't mean it's a double 1-2 confirmed, 1-2, 1-2. Because if this range is longer than your first wave 2, probabilities do go down for a double 1-2. If price, however, moves down, and it moves down in a 3 waver, and then you go back up, think about a WXY double zigzag. So yeah, I mean, sounds, I guess it, in a way I try to make it simple, but it's of course very complex material, because the question is how probabilities change. And yeah, this is how it changes, I suppose, no? Which is the most difficult about Elliott waves for most people is understanding how do probabilities change. So they, especially in the beginning, and that's where I was, right? I talk from my experience. That's where I was. Studying Elliott waves itself is relatively easy. Of course, it's a lot of information, but it's a repetition. Paper, pen, summary. Implementation is difficult because structures are not perfect. But then how do probabilities change with everything that, the volume and the length of structures and the fibs, right? And the targets and la-di-la-di-la and sub-degree counts. That is where the significant difficulty, of course, comes in. It's not easy to explain it, but hopefully you now know more about how probabilities switch with the 618. Work in 5 hours, diving underwater to repair a dock. Yo, good luck, Ace Winner. Wow, what a crazy job is that? Diving underwater to repair a dock. I'm actually curious what you do. But good luck, man. Good luck. Why don't you add some services in the website, example, a Zoom call or chart analysis? Website is being built. I actually sent another email this morning to confirm on what was offered and suggested. The reason I don't really want to go into, unless I have a team, the reason I don't really like to go into one-on-ones yet and individual chart analysis and stuff is because of time. So there's a lot going on in the background. And even though, of course, you only see me when I make a video or a live stream, of course, video takes preparation as well. But there's a lot more going on in the background, which, of course, people don't see. So the problem for me is time. Now, of course, if I would find someone that's like, yo, Koen, I'm happy to be a coach. First of all, I have to check their Elliott wave knowledge, right? And if it's up to the standard that I set, then I can be like, like if people want to have more like one-on-one coaching, would you want to do this? And then, of course, under my guidance, I'm above the coach, and then the coach teaches people. And then, of course, according to also how I approach Elliott wave analysis, and everyone has their own style, but at least like that person knows about the 886 and that sort of stuff. I mean, that would be a possibility, but at the moment I'm not in a position to do it myself because of time. Overbought. A bit of a problem with RSIs and maybe MACDs and stuff is you can stay in an overbought or oversold area for a very long time. I will use an example here. If you're in a bullish environment or, of course, a bearish environment, I think the greatest example that I can show you is when price moved. I got to go to the daily. When price moved up, there was a bearish RSI divergence on the daily here at 34K. You can go back to check the RSI here. This is where you had your first bearish RSI divergence. Then price moved up all the way to 48, came back down. And then we moved up again with more RSI divergences. And then here we are at 73. So I would not really look at RSI and stuff too much, but I also don't use it. I think RSI is a great tool, don't understand me wrong, but you got to know in what market conditions you can use it. And the problem is that if you have the potential of multiple 1-2s, RSI is interesting, of course, when you have a single 1, 2, 3, 4, 5 RSI divergence between wave 3 and 5, right? That's the classic with Elliott waves. However, if you have multiple 1-2s, right, you're going to have multiple 4-5s. And even if you do create multiple 1-2s, you can already in a later stage 1-2, you can already create a bearish RSI divergence. And then you didn't even have your 3 yet, and you're still looking for 4-5s. So you can be an overbought for a very long period of time. And then once price, if you have, for example, 3 1-2s, you get your 3, and then 4, 5, 4, 5, 4, 5. your first 4 or 5 will show a bearish diff as well on the RSI. But then you still have another one, and you still have another one. And these wave 5s can be quite long as well. So you're going to miss out on a bunch. I personally like to recommend people to just check out CVD. If there is something that is, in my opinion, a lot more useful, but it takes a little bit of practice, it's CVD. Of course, I mean, am I biased? Really? I've used RSI in the past. I've used MACD in the past. I've used CVD, money flow indicator, but there's nothing that beats CVD so far. It's the only indicator I use. It's by far the best one I have ever used. I absolutely love it. And I only really, of course, can recommend stuff that I personally use. So, yeah. I gotta go, guys. What is the yellow and blue lines? Adam T, make a quick screenshot of... Oh, wait, the yellow and blue lines... Wait, Adam, I recommend to click on the link tree below and then go to CVD explanation. This video will... So blue is aggregated CVD, yellow is Bybit CVD. Now, I don't trade on Bybit anymore for years already, but it's the first platform I used. And the CVD I, at that moment in time, got was the Bybit CVD because I traded on the Bybit platform. And every CVD line is different. So I got used to the CVDs that I use, yellow, Bybit, blue, aggregated. So I never changed because I got used to these lines. Feel free to change it, of course. But this video will give you, it's on YouTube. It's just a YouTube link. Or go to my YouTube homepage and go to the educational playlist. This will give you all the information about the CVD. And then if you also look for the template, then it's here. You can just download the template. So, yeah, it's not... I gotta go, guys. It's 4 p.m. 4 p.m. Short-term structure on Sol and ETH. Sol should take all-time high. I did Sol and ETH yesterday, so I recommend you to go to the live stream yesterday, the alt stream. Yeah, exactly, TP. I mean, there's a book from the author, The Mental Game of Trading from Jared Tendler. He also wrote books before The Mental Game of Poker. Are you excited shorting the market at the next bear market? Absolutely. Just mention it as it came up. Yeah, I mean, 80 bucks is, I mean, I don't know, but my time is worth a lot more. So in that regard, it's quite crazy. But of course, then it's his team and you don't know the value of the team. But yeah, could be interesting. Of course, you can then upload it as a video. Yeah, as if the quality recording is high quality and the voices. But yeah, something to think about in the future. RSI is only good at telling the past, not predicting. RSI doesn't work in supply shock. Another new high. Yeah, I don't really use RSI. Yeah, you're late. So that's also why I can't really answer questions. What do you think of FIB time of the eventual new 1-2 setup? Does the eventual 2 fit in the time of the 1-2? You compare a wave 1 with a 2, and preferably every new 1-2 is a bit shorter in time and price, especially the wave 2s generally have the same structure. But you compare your 2 initially with your wave 1. Don't do 50-minute. We just move up, so it's not relevant. And that's that. Okay. So to judge if it is, there's still, who are you, RSI, to judge if it's, yeah, exactly. It's with, it's overbought, but yeah, there's price can just move and move and move before. I mean, yeah, and then just go to the daily time frame when price was at 34K, and you'll see the first RSI divergence, and you're still pumped another 14K before ETF, and then another 30K to 70. Like, yeah, I don't really value RSI, but I do CVD. Thanks everyone for being here. I gotta go. We've been online for an hour and 40 minutes. Very nice. So thanks everyone for hanging out. Appreciate it. Price moving up, and also the Elliott wave recommendation, as always. If price is moving up, also a bit of volume here, but if price is moving up, you just got to wait for another range. It doesn't make any sense to analyze local price action without a solid range, which for me is at least a couple of hours of sideways price action, which at the moment we don't have. So there's not a lot to say about the local stuff, but we have covered in the analysis the high time frame, the weekly, the daily. And of course, in chatting and Q&A, we covered a lot of questions that people had and some education and how I find some resistances and whatnot. So if you're interested, check it out, right? But thanks for being here. Odin, Mark, Jeroen, maybe a Band-Aid, Adam. Thanks, guys, for hanging out here as well. And tomorrow, new live stream. Tonight, let's see what price action does, because if there is... not really anything to update you on. I might just go live for the chill and the fun. But let's wait and see if price does anything, because I either do go live if nothing really changed, and then we can chat Q&A, maybe look at some alts, or I'll be back tomorrow morning. So because then we did an altcoin stream yesterday as well. So I'm not yet sure about tonight. Let's see what price action is going to give us. Thanks, everyone. And I'm going to catch you at the next one.